Hello and welcome to the Trading with Ashley show. I'm so excited to bring this video to you, and I strategically am dropping it tonight so that you have plenty of time over the weekend to study this video so that you have everything you need to actually go and sell puts come Monday morning. It is such a wonderful way to generate income. Now, I spend all day, every day, studying the markets and looking for trade setups, and I share those with my community members. Today was especially exciting because we actually had a full working session where we brainstormed on all of our different ways that we plan to make money in the coming weeks. And we came up with the most incredible list. If you want access to that list and if you want to be a part of this community, you do have to click the link below. Book a very brief call. We can have you set up to trade with us as early as next week. There's so many money opportunities in the market right now. With the volatility as high as it is the best time to sell puts. Now, what I stress in my community, because it is very important to all of us, most of us either have retired to trade or their goal is to retire to trade. And so we have to be very careful with everyone's money. We don't want to take too many risks, but we do want some incredible companies at great prices. And that's where selling puts fits the bill perfectly. I am very grateful to all of you, my viewers, but I am rebuilding and rebranding, and this is a gift to you to help you make sure you have everything you need to start generating income. So I could use a huge favor, though, in exchange for this gift that I'm giving you. If you could please subscribe so that you don't miss any videos. And then will you take this video and just send it to one person? That's all I ask. If you will forward this video to one person, I think that will help increase my reach. Because the more subscribers I have, the more I'm going to offer. I am trying to get to a level where I can offer a free workshop for all of you that are interested. If you want to make sure you're notified of that, sign up for my email list below. Now, let's just talk for a minute about why selling puts is so lucrative. Well, why would anyone even be interested in a put? So just like you and I have insurance on our homes, a lot of individuals, especially in these volatile times, they want insurance for their portfolios. So let's say they're heavily invested in a stock like Tesla, and they have nursed Tesla up from when it was maybe at 150 all the way up to where we are now. So they might want to ensure that if Tesla starts to go down and it goes down too far, that at least they'll get some profit out of it. That's why they may purchase a put. They want it guaranteed that someone will take Tesla off their hands at an agreed upon price. So if they bought it, let's say for 150 and it sits today at around 200, maybe they're comfortable giving up a little bit and selling it for 175. Well, in comes you, the put seller. Maybe you don't have Tesla, or maybe you don't have enough of Tesla, and you know that a good entry price on a quality company would be 175. Because you are of the belief that Tesla will be a lot higher than 175 a year from now. If that fits the bill for you, then what you would do is sell the put option to the buyer. And selling put options is so lucrative because you will win that trade 80% of the time. Yes, 80% of the time. If you buy a put option, you only win that trade about 20% of the time. So why would anyone buy it at all? Well, like I said, they're in a different situation. They want to secure their portfolio. And just like you buy insurance for your home, let's hope you don't have a fire or a flood of anything of that nature. But you'll pay money in case that does happen because you want some protection. And so in this scenario, you are the insurance company. And we all know insurance companies make great money. So we want to be on the receiving end of that trade. Let's talk about how much money you have to sell a put. Well, since you are guaranteeing somebody that you will take the shares off of their hands, then you will need enough to purchase 100 shares of the stock at the strike price that you agree to. So in this scenario, if you agree to sell a $175 Tesla put, you will need $17,500 to sell that put. Then those funds would be held in your broker account in case by your expiration date, Tesla gets down to 175 or below. So where does the premium come from? Well, that comes from the option buyer. You are guaranteeing their portfolio for that particular stock. And let's face it, you're taking your money out of circulation to guarantee their portfolio. As a result, you will be compensated for that. Now, when the market is as jittery as it is and volatility is as high as it is, you're going to be compensated more heavily for that. So when the markets pull back, when the VIX is high, and when everyone's super nervous about the portfolios, that is the best time to sell put options. Let's talk about how much money you can expect if you're going to be selling puts. Because if you're trying to plan for retirement, you want to fully understand how much money you'll need to run a strategy like this. If you are selling puts in the right way, and I teach all of my students how to do this safely, if you are doing that, then you can expect to make about 30% a year in premiums. Now, that's a combination of premiums on the puts and on the calls. I'll do another video on how to properly sell calls. But for now, let's stick with puts. So if you can make about 30% a year in premium, do you realize how lucrative that is? Let's compare that to, let's say, the S&P 500. The S&P 500 will offer traders about a 10 to 12% annual return. Well, that's okay, but 30% is going to allow me to do a lot more than just 10 or 12%. After all, inflation accounts for 2 to 5%. So you want to make sure that you're at least above the S&P 500 when you're doing any trading strategy. What about what stocks to sell puts on? Because that's really one of the most important decisions you'll make in your trading journey is what stock do I begin to sell a put on? Well, there's a lot of things to look for, but the very first thing I want to share with you, it must be a stock that you want to own. One thing I have found with traders is that they really don't want to own the stock and they're just chasing premium. Well, then if it gets close to their strike price, they bail. And if they bail, they lose money. But after you have checked the box of I really want to own this stock because I believe this stock will be higher in the future than it is now, then you have checked the very important first box of selling a put. Now your next question might be, when is the right time to sell a put and what strike price do I select? Well, there's a lot of different ways to get at that, but I am going to show you in this video what to look for so that you can make sure you are set up for the right trades. If you look at the technical analysis on a stock like Tesla, you want to make sure that you are selecting a strike price that if you put the shares, then you will see the price rise and you'll be able to take advantage of that rise. You don't want to sell a put on Tesla when it's at the height of its price journey. So we'll go through all of that detail next. The plays you see right here represent a 4.2% return in a week. So it took $56,900 in capital and it produced $2,415 in premium. So when I say that you can realistically hit about 30% annually, that is very doable because just this example alone, if you were able to replicate this every week or anything close to it, you're looking at a 220% annual return. Now, setups like these don't present themselves every day, but when they do, I strike and I alert my Discord members so if they're interested in taking these plays, they can do so as well. But this is how this is done. You are basically on each of these plays, I am setting aside the cash and I am agreeing to purchase these stocks at the strike price that I have selected if by the expiration date, they're at my price that I've selected or lower. And as you can see, these are all quality companies that have a very bright future. So if you are going to do the wheel strategy, if you do it this way, when you select companies that you want to own, you won't behave irrationally like I mentioned earlier and try to get out of the trade. You'll welcome the trade with open arms and say, come home, come to my portfolio. Let's first go take a look at the Tesla play. That's a popular stock. And owning it, in my opinion, under $200 is a gift. Let's go look at it and I will show you exactly why I selected 185 and how I was able to garner such incredible premium of $2.13. As you can see right now at end of day, this was only worth $1.31, but I was able to get $2.13 and I'm going to show you how. This is looking at Yahoo Finance, and I use this to garner a lot of information on a stock. And one of the first things I do when I pull it up, I want to see, are we having a green day or a red day? And at the time that I executed this trade, we were actually having a red day. So it got that box checked for me to be able to sell puts. And the reason we check this is we will get more premium on a red day. Basically, when someone's nervous about their stocks, they're willing to pay more and they get more nervous when a stock is going down. That's why we wait for red days to maximize our premium. One of the first things I look at is right here, earnings date. I want to go in with eyes wide open. If I am going to trade around earnings, I want to know, because that's going to increase my volatility, but also increase my risk. So that plays a big part of my decision. But it looks like we're good. Earnings aren't until October 18th, and this is going to be a weekly trade. Next, I go to my chart, and it looks a little bit like this. This is called a Bollinger Band, and it's giving me a wealth of information. But you need to make sure that you're looking at the right time frame on your charts. So when I am selling a weekly put, I want the benefit of looking at least a month's worth of data. The further out you go on your time frames, the safer these trades are. But you don't want to be too safe, because then you're going to cut into the potential premium that you could make. So I'm looking at the 1 month chart, and I am looking at this data right here. The Bollinger Band is a predictive technical analysis tool. It shows you where your stock will more than likely stay between the lines. Like when you were a kid and you were learning how to drive a car, maybe as a teenager, and your parents said, just keep it between the lines. A lot of times these stocks prefer to stay within their Bollinger Band. Every now and then they'll come out of the band, but then they typically retreat back under the cover of the band. So this can be a very strong tool that helps you make the best decisions when you're looking at strike prices. So you saw that I sold the 185 put. Well, notice right down here, this is 183.71. So if I happen to be put the shares right down here about 185, that's a great trade, because I will be able to then take advantage of riding this stock all the way back up to the top of this band. Or I may decide to sell it once it's the middle of the band, just depending on what kind of news is out about the stock. The other thing that I looked at was right here at the RSI. Anytime this is under 50, we're considered in a bearish zone. And a bearish zone is a really good time to sell puts. If this is above 50, you can still sell puts, but you definitely want to wait for a red day. And if we're above 50, oftentimes, instead of the bottom of the band right here, I like to use the middle of the band as a potential zone, or something in between the middle and the bottom. That's if your RSI is over 50. But we're under 50, so when we're under 50, I like to use the bottom of the band to give me my first clue on where I want to go shopping for a potential strike price. You can go to any option chain. However, the things that I like to look at are all listed right here. We're looking at the bid and ask. That's critical because that helps determine the price. You're looking at the delta, very important metric I will explain. You're looking at the volatility, and then, of course, volume and open interest, because that tells you how many people are interested in this particular price point for a stock. Once you get to your chain, you start at wherever the stock is. Now, I mentioned 185, so I'm going to immediately go to 185 to take a look at all of the information there. Once we get to our strike price, here it is at 185 was the one we were interested in. We want to start looking at some other information, namely right here, the delta. The delta is going to tell you your chance of it hitting this strike price by your expiration date. And the way you interpret this is, you see right here, it's 0.15. So that would be about a 15% chance that it would hit 185 by your expiration date. In this case, we're looking at 8/16. For that, I am going to be compensated $1.31 for the trade. Well, I know you saw earlier that I got a lot more than that, and I'm going to show you how I accomplished that And actually, I did this with all of my trades today, and it worked out beautifully because I started trading within about the first hour, hour and a half of market open. The other thing that caught my eye was right here, the volume and open interest. Ideally, you want to have a lot of open interest and volume on the strike price you're selecting because that's going to help you get a better feel on the stock. Plus, I also like to line up behind where some of these larger amounts are. If you look down this chain, we have 20,000 in volume at 195, 21,000 in volume at 190, and then 10,000 in volume at 185. Well, these are a lot of orders that this stock has to get through before it gets down here to mine at 185. So there's a margin of safety when you line yourself up behind very large amounts of volume and open interest on the chain. Okay, now here is where I'm going to explain to you and show you how I am able to try to get the best possible price on my stocks. I know this looks kind of like a light bright to those of you that had light brights when you were little, but this is what I do. So in the morning, if you look right here on this bar, this is in Trading View, this will typically stretch within the first hour, hour and a half, and these endpoints will usually be defined. 195 to 200 is where this stock stretched today. So after I have watched the market about the first 45 minutes or an hour, I like to see where our endpoints are. Then I sit patiently and wait. You can set yourself an alert. And once it's back down here at the bottom part, that's when I go to sell a put. Because I know that the closer this is to the bottom of this range, the better premium I'm going to get. And if you're doing this in the morning, you are going to be dealing with a lot of orders that are coming through. So I like to sit patiently and wait till about an hour and a half, because if you do that, then you get through all the noise of the orders that have been placed through the night, and the institutions start doing all of their trading about an hour in. So if you wait through all of that, you're going to get the best possible entry on your stock. When I went to make this trade, I selected the 185 strike. And here's what I love about Merrill. They show me the day's range, 124 all the way up to 245. So what I like to do is when I am filling out my order, I do a limit order, and then I select a price that's close to the top of the range. So today I put in 231, and it did not fill right away, but I made it good for the day. And eventually I got the notification that it filled, because the stock will oscillate up and down all day. And sometimes I've noticed that if you put a limit order in and just sit, sometimes it won't fill all day. And at the very end of the day, it'll get filled if the stock is still close in this range, because the market makers are wanting to fill these orders. That's how they make their money. I hope you found this helpful. Again, it's my gift to you. I would appreciate a like and a share. Share this video with one person, and then I will make a follow-up video about how to sell calls, and then you'll have everything you need for the wheel strategy. You can watch that video here.